Hey traders, Raghee here, and in this video we're going to talk about current market tendencies, what seems to be a pattern in the market, and it's actually something pretty tactically you can put to use right now. So there's a few things that we've noticed about how the market is moving. So the first thing is, well, what does move the market? Now obviously price thresholds move the market, support, resistance, or price. We also know technicals can move the market. So technical indicators, being above or below the 200 has a certain bias, certain moving average crosses, things like that. So technicals have an impact. And then fundamentals. Now fundamentals can be so many things to so many traders, but let's just chalk this up as something that would be news or data. Anymore, it's even things like tweets. Okay, so these are going to be different events that can move the market. Now, of those three, usually one is going to be taking the lead. And, I don't think there's any question right now that as much as I love technicals, as much as I absolutely rely on price, we are being moved by tweets and news and data and headlines. I mean, you can throw headlines in there as well. So this is what's happening. Now, not all of these are scheduled. Certainly they're not all measurable, but there is a measurable reaction. It's very hard to prepare for something that we don't know is coming. Data is easy. Scheduled events, as in any Federal Reserve event, typically, again, it's on a calendar, it's scheduled, we know when it's likely to happen. So what is the tendency we're seeing right now? Again, for these unscheduled tweets and headlines to move a market. But one thing you'll notice by and large is that news that is going to be negative to the equities markets comes out over the weekend, comes out after the close, comes out during non-active trading hours. Good news, whether that be delay of tariffs, whether that be two sides that are making good progress on trade talks, whether that be the U.S. and Europe, whether that be the U.S. and China, those types of events seem to be focused during active trading hours. So bad news after hours, good news for the equities markets during trading hours. So it's really tough to want to be short this market, even though we've seen big sell-offs like we did on Monday. For the most part, if we're playing probabilities and we're not in this sort of cherry picker's dilemma, right? If we're playing the probabilities, what I'm talking about is what's going to happen the majority of the time. So today we get news that Lighthizer is talking about, whether or not those aluminum tariffs and steel tariffs will even be, we'll get rid of it perhaps, right? I think that was a proposal with a meeting with Canada regarding the USMCA, the UMSCA, that would include some sort of plan or process for removing the aluminum and steel tariffs. So Canada and Mexico have said we need to move the deal forward. That would be a biggie. So Lighthizer is saying, yeah, we're proposing a plan. Good news during market hours. What else do we hear? Mnuchin says we're close to a deal with Mexico and Canada on tariffs. Good news during market hours. The president said we could delay the decision, or will delay the decision, on the auto tariffs, right? So the auto industry, the auto sector has been spared. So that's a U.S.-Europe conversation, again, during market hours. So there are certain tendencies. Bad news after hours, good news during market hours. So another thing I want to talk about is tendency in time. Now there was a time, and many members who are listening to this will know that I still look at the market around 8 o'clock. I'm usually up. My trading day starts easily around 6. I'm usually up between 4 and 5 a.m. Eastern. I think the hour to 90 minutes before the bell and the hour to 90 minutes after the bell are some of my most important. That 2 to 3 hours per day is what prepares me for when the bell rings at 9:30. So there was a time where I was actively looking for potential trades between 8 and 9:30. Even sometimes between about 4 a.m. Eastern and 9:30. And I was finding, because of the environment we're in right now, I'm really better off treating anything before 9:30 as a completely separate day, and anything after 9:30 as, again, just another separate day, not really looking at a continuation of psychology, because that actually is not what we typically see. So there's sort of a hard line I'll draw here at 9:30. and then everything that comes after that is its own little reality. And you can see the kind of movement we saw pre-open, and then going into the open, and then after. We've been long the market in the room all day. Why? Because the two that I focused on the most, gang, were the NQ and the Russell. Now, all four had different triggers, but I'm going to refer only to alerts that I was able to send out to members. Otherwise, to me, it sort of happens in a vacuum. So these were alerts we sent out to members in the morning regarding my clearing range trade, which is that trio of the breach, the potential for the retreat to the VWAP, or the retest of a support level, in this case, like the clearing range breach level itself. So think of it this way. If I come back and retest the clearing, like so, we go up, that's momentum, right? We move higher, that's momentum. We come back, that's a retest. We go up and head down to this, that's a retreat, right? It's usually going to be an area lower than the clearing range breakout, right? So that's what we did today. I sent out the alerts. We've been long. And then, one thing I'll talk about in more depth during the premium video is what we do to understand whether or not the market is going to be a runner. Like, how do I know just to kind of leave the market alone looking for higher highs as the day progresses, right? Knowing that typically good news, good headlines, good tweets are going to come out during market hours, which is why we've really been shifting very organized, very concerted effort to shift to kind of a 9:30 Eastern to 4 p.m. some type of day trading approach, because it's easier to play the probabilities of the breaches that happen after the first 30 minutes of the day, and then just kind of wrap things up by 4. And with the new micros that are out, I talked about these in yesterday's video. The new micros that are out make this a whole lot more affordable, allow traders to scale in, scale out. This is really allowed me. I don't trade micros myself, right? But I have played around with them just to see how they feel during the exits and entries. But I play minis, but I might play multiple minis. I do play multiple minis, but it's not always realistic for new traders or small accounts to follow me in to a multiple E-mini position in Russell, S&P, etc. So micros have really changed what I can share, do, recommend, and what the members can do. So I'm super excited about what this means to a lot of traders. Lower risk, the ability to scale in, scale out, and today's a perfect example of remembering that 9:30 is a significant shift, what kind of news happens during the active hours of the day, and how we want to typically position ourselves after the first 30 minutes of trading. We'll talk about what we do after the first 60 in the premium video. But in the meanwhile, gang, I hope that you guys are watching these tendencies. Here's a few of them that are playing out very well for me, and I'll see you in the next update.